Ladies and gentlemen, boys and girls, people from all around the world, welcome back to another video. So the crypto markets are taking a bit of a tumble. Bitcoin has gone down a bit in price. And in this video, we're going to be talking about exactly why this is happening. We're going to be talking about some of the escalations we are seeing in the markets and talk about what is going on in the general hemisphere of the earth. Does that make sense? Probably doesn't. All right, let's see what's happening in the market. Got it. So today, the global crypto market cap for today is sitting at $1.91 trillion or a 3.81% decrease over the last day. This is happening because mainly Bitcoin did take a bit of a tumble, and we are seeing a little bit of that reflection happening in altcoins. What's interesting today, though, is usually when we do see Bitcoin falling down, we see an amplified effect amongst most other altcoins as well, but it looks like that doesn't seem to be the case. Most other altcoins, especially the high caps, are down in price, but they're not significantly or even double the amount of losses that Bitcoin is. If you guys have been waiting to enter the market, it is definitely days like this where we do see a bit more red in the market. The Crypto Fear and Greed Index has not yet updated, where in about 3 hours, 43 minutes, we'll see a new indicator showing us where we are in the state of the market in terms of sentiment. Now, in addition to that, guys, when we're seeing and, just talking about the price of Bitcoin, a lot of people get spooked whenever we do get volatility like this, whether you are a newer investor or you've been in the game for a while. Sometimes we do have those off days where when we see some red, see some tumbles, especially after having a good solid week, it does tend to frighten people up. But these are really the days where you want to make sure that your emotions are in check. We're going to do a little bit of on-chain analysis later on to show you guys exactly what is going on, what are the whales are doing, and some of the supply shock that has given us a little bit more of a bullish indicator as well. So another thing to take a note of, especially with today, is going to be the moving average. Although Bitcoin is currently down to $41,000 today, we are still above that 20-day moving average, which is strong support for many other technical analysis. And it's something that we use frequently on our channel to get a gauge at least of where we are in terms of moving directions. For the 5-day moving average, though, we are down $42,802, down about $1,000 in terms of price target. And we are still well off of the 50-day and the 100-day moving averages. And it looks like if we are able to pick ourselves up out of the bottom, then we can see a bit more greener sentiment in the market as well. So even during this week, or even starting before the Super Bowl and having the tumble and then going back into where we are currently, with Bitcoin sitting at $45,000, that seemed to have a lot stronger sentiment then before we had the tumble back down. I think even right now, as we approach the month of March, a lot of the crypto moves are still dictated by what we're seeing within the entire world, with the entire state of the war. And that is something that we're going to be talking about. That is the title of today's video. And that is going to be about Russia. So if you guys have not yet heard, Russia is actually planning to invade Ukraine, and there's a lot of history behind this. I'm learning right now a lot more about what's going on and some of the events that we've seen happen before. To take note, this is not the first time Russia's actually threatened to invade Ukraine, or they've not even done the actions of invading another country. Russia back in 2014 has shown similar movements back then, and this is just because of the geography that we've seen with Ukraine and Russia. Taking a look at this chart right here, it's actually showing how much of Russia's troops are getting placed around Ukraine right now. And this is actually one of the adjacent connecting countries that they would like to have larger positions in. So the reason why, because war is not new. We've had Afghanistan, we have had Iraq, we've had various amounts of different countries, having some beef, especially when the US was involved. But why is this right now affecting markets? Well, the reason for this is because markets are based off emotion. When we talk about crypto, stocks, and just investors making moves in order to hedge future opportunities or even just different landscapes we may see, whenever we get uncertainty in the markets, this usually shakes it up in terms of emotional psychology between investors, but there's also additional reasons as well to that as well. So one of those is going to be the article we have right here. And this is actually coming from Investopedia, which is breaking down why modern stock market is still affected by war. Now you guys are wondering, Brian, we're a crypto channel, man. Why are you not talking about Bitcoin? Why are you talking about stocks? Well, even especially in the past few weeks, we've seen such strong correlation between the S&P's movement and things like Bitcoin, where even in the same day, we're seeing the price of these markets go down. Now, on the most optimistic prediction for the market, I do believe we are going to see some decoupling happening within the crypto markets and other equities involved as well. But I think it is going to take a little bit more time, especially once we are able to get through March, where two of the predicted dates, the rate hike announcements where we start seeing interest rates going back up. And then we also have tax season coming up, which is something we discussed in yesterday's live stream as well. So going back into Investopedia, some of the key takeaways they state in terms of where we are with war and uncertainty and how this affects us as investors is this. While war and defense spending can be a sizable portion of the US GDP, wars often have little sustained impact on stock markets or economic growth at home. Markets largely have ignored recent conflicts related to the Middle East and Iran, and a war between Russia, Ukraine, and NATO allies, however, may have a more severe impact, especially on commodities price. So this bottom line right here is something that you want to take note of, because when we're talking about other countries, especially Russia, there actually is a lot more involvement with precious metals, oil, barrels of other commodities that do affect markets. So when we're talking about financial terms, you're going to be noticing the term basis points a lot. How much in basis points are we going to get those interest rates going up to pretty much lower the inflation that we're seeing? We're also going to be talking about how many basis points are going to affect the current markets when we do get Russia's plot going into Ukraine. You want to keep an eye out on what is going on in the current state of the world, but don't get too sucked into the headlines that we see mainstream media providing us. So, moving on, you guys, there are some additional articles that I did want to talk about today. One of this is going to be the FBI launching their team to address crypto exploitations. As you guys know, even with the most recent headlines of the Bitfinex hack involving billions of dollars of crypto that was stolen, it looks like the US government is moving towards in the right direction. Even this month was supposed to be a month of regulation where we're hearing about what's happening next with stablecoins, what the rules are. And when we had other entities involved, such as BlockFi, who recently got a $100 million fine from the SEC in a settlement where $50 million of those dollars is going to the SEC themselves or the government. And then we're getting the additional $50 million sent to 32 states where, the BlockFi company was operating in a manner that wasn't pleasant to the US government. This is something we mentioned earlier, and this is what we're seeing exactly now, and that is regulation happening. This is where companies are being made as examples set, so we have a better understanding of what we're going to see in the near future in terms of more rules and laws. Now, in terms of BlockFi's current situation with what they got penalized, I do think it's quite unfortunate to see our company getting slapped right now by the SEC, but at the same time, it is going to pave the way. And BlockFi does have enough funding as a company where they can survive even settlements just like this. But if this had happened to any smaller DeFi product or any company that may not have raised the rounds in order to survive even a penalty like this, it could have been much more detrimental to the space. But even right now with how things are getting handled, I think we are still in a pretty good situation, especially because we just did not have enough clarity within these markets. One last thing I did want to talk about today was going to be the Bitcoin supply shock and Bitcoin on-chain analysis. And Cointelegraph did an amazing job at breaking this down. They went ahead and used Willy Woo over here with giving us a breakdown on what we are seeing on blockchain data and what we're having with Bitcoin at its current moment. So they state here, the price recovery witnessed in the Bitcoin market across the last 2 weeks has coincided with the rise in hodlers and speculative investors selling their coins. Nonetheless, Bitcoin's price ability to withstand the selling pressure meant there was a buying pressure coming from elsewhere. Cointelegraph reported earlier this week, the so-called Bitcoin whales are now accumulating Bitcoin at current price levels. If we take a look at this, this is the adjusted Bitcoin supply shock, where the blue line is the current price of Bitcoin, where we're seeing speculative investors and hodlers turning their sentiment. So we're actually seeing this flip where investors are pulling down the amount of investments they're having in terms of the quantity for Bitcoin. In addition to that, we got a quote right here stating this view is supported by coins moving away from exchanges to cold storage. Cold storage is going to be anything like your Ledger wallet, your Trezor wallet, anything where you can move your crypto off of these exchanges into a private key phrased wallet that you have in your custody. Whenever we do get coins moving away from exchanges, this is oftentimes bullish because people are preparing to hold those coins for a longer amount of times. If you want to liquidate those positions, oftentimes you're going to have to move it to an exchange so you can actually cash it out in USD. When we saw the markets at a near all-time high, we did see a lot of this happening. We saw coins coming out of cold storage, going onto exchanges, and then we saw prices selling off. This is also another good indication because they even state here, meanwhile, whales who hold more than 1,000 Bitcoin are continuing to accumulate. So obviously, larger entities or institutions who are deploying more capital is going to be good news for us because they still have a big part in the market. If you ever think like, hey, I just sold Bitcoin and that is going to affect the market, you're sadly mistaken. There's just so much money that needs to be involved for the current market cap of Bitcoin to move at its current pace. Ooh, little live stream. Anyways, guys, so with all that being said, I do want to mention, with the current state of the market, if you guys are newer investors, please don't get spooked. We see this time and time again. If you have been waiting to enter newer investments, we have been seeing much higher price action with some of these altcoins, but now we are getting that cool down. I think this is fairly normal. Even if we take a look at Avalanche in the last 7 days, Avalanche was riding up pretty strong, and it is just normal anytime for us to get these corrections in the market. I do hope that we begin to see altcoins decoupling itself from Bitcoin too and other markets, but I think it's going to take a little bit more time for that. And if you guys are still trying to hedge against different markets, I think it is important for us to note that there are other investments that you can make, not just within these type of assets here. But if you're trying to stick strictly within crypto, loading your money into stable coins and still earning additional interest is not a bad play that you can make at all during this time. So what we're going to notice with high caps having that pullback, if you have any low cap cryptos or micro cap cryptos that have been on your list, make sure that you're continuing to watch for that. If they do drop down lower in price at a certain point, assets will be oversold. And that means you're going to hit a bottom and you're going to be able to average into those positions to continue making money on those investments. So guys, that is today's video. We're trying something new. If you guys are watching these live streams, we had like 3 errors today. What is going on? We had 3 different errors today. I'm used to doing these videos when I can just record and then edit the mess ups, but trying to get better, trying to get more comfortable with these live streams. And if I have a better chance to interact with you guys, even within the streams too, let me pull up chat real quick. It's gonna be better. Yao FOMO, thank you for the dono, by the way. And wait, oh, Mike's in here. Yo, Mike, thank you for tuning by. Gary, thank you for tuning by. If you guys are watching a replay, of this, don't forget, I'm trying my best out here, especially when the markets are a bit slower. So we're going to have a little bit more fun with this, but give me about a week or 2 to adjust. I think once we get into the groove of things, we'll be a lot better. One more thing, we do have our sponsorship for today, and that is going to be FTX. FTX actually has been a big part of this channel for the past few months, or at least since the start of this year. If you guys are looking to buy crypto at some of the lowest prices you can in terms of trading or transaction fees that other exchanges might charge you, check out FTX. They've been building out their ecosystem really well, and this is something that I've been starting to use as well too. Ocon Photography, thank you for the $1.99 dono. I appreciate you, and I appreciate you guys. A lot of great supportive comments over here. So guys, oh, Tom says he likes the live. Well, I appreciate that. I appreciate you guys. Dang, you know, it's one of those things where it's like YouTube, you don't realize like how many people are watching these videos, and it's a slower time in the market. Not many people are interested in this content right now. So I think it's times like this where I double down on my most committed supporters and fans. So my brother. Oh, you're just chilling? All right. Anyways, I got my team in here as well. We've been doing a little bit more different stuff. And we're trying to come out with some more better content. Ocon Photography, thank you for the $9.99. Appreciate you, fam. Linwood, Tristan, Robert, I appreciate you guys all so much. Yeah, FOMO, Wes, stop it. Stop giving me donos, guys. FTX is covering it. Anyways, thank you all so much again for today's episode. The next video we have coming up is going to be a top 5 crypto picks video. My reasons on why they're such powerful picks as well for this upcoming year. In addition to that, just keep up the good work, guys. We'll be ramping up the quality of the content on this channel, and I appreciate all the amazing things that you guys are saying, and for being a part of the Jungle Nation. Love you guys. Have an amazing day. Peace out. Ba ba ba.